Hello, my name is Aaron Edwards, co-founder and market consultant of Santos Springs. We offer grain marketing solutions to producers in multiple countries. Welcome to our W2H grain marketing channel. Go ahead and hit the subscribe button. I also recommend tapping the bell so you get future notifications. And if you like what you see, hit the like and share this video with other farmers who care deeply about their grain marketing. If you are a corn or soybean farmer, your revenue depends not only on your production, but also the answer to three simple questions: when, how much, and how you sell. One W, when, two H's, how and how much. Our W2H mentorship provides a clear, concise, and custom approach to answering each one of these three questions for your specific farm throughout the year. Before we start this week's content, it's always important to remember that trading in futures products entails significant risk of loss, which must be understood prior to trading and may not be appropriate for all investors. This commentary and the information contained within should be considered market commentary and reflect the opinions of the author. For those of you watching this with a delay, if you are a U.S. corn or soybean farmer and want to stop being held hostage by market uncertainty, let us teach you how to place each one of your bushels in a grain marketing strategy specifically designed to optimize your farm's revenue. Click on the link and we'll work together to see if our W2H mentorship is the right next step for your grain marketing. For another edition of our weekly update on markets. This week, I believe, will go down as an important technical week and a record-setting fundamental week. We will just get in just a little bit. We'll get into the market update, but before we do so, I always want to just start with the action plan. Right? If you're busy, you're just wrapping up harvest, you're worried about 1,001 things, and you can't watch the full video. I want to make sure that you have the takeaway. So I'm going to go ahead and pull up the screen here, and we're just going to start out with action, and then we'll back into the thought process behind it, and we'll fill this all out together. But if we want to look for this week, if you are a corn or soybean farmer and you're looking to make sales, I will walk you through the justification, but there is no action required this week on your selling strategy, in my opinion. So we'll talk about all the nitty gritty. We'll get into all the details. But if you're too busy to watch the rest of the video, can't go through that, go ahead and go on with your day and watch this when you have time later on down the road. But it is an important week. It's just I don't see a need from a sales standpoint. So let's go back to talking a little bit about market commentary and what we can expect. So I wanted to pull up some images here. Let me get. We'll get to this one later. Let's start with this. So many of you may know this is a picture of Brazil production. And let me see if I can get this to where we edit it, mark it up a little bit. Well, this is the main one I wanted to show you. There we go. If we get it big and then some technical difficulties here. Yeah, that'll do it. Okay. Let's get this off to the side. All right. So if you were watching last week, this is what we had. We were sitting right here at 17%. It's not marking it up. At the bottom, we were sitting here at 17% planted. Right there, 17.6% planted. That's soybeans in Brazil. Soybeans in Brazil were 17.6% planted. And I had said that, hey, you need to get over 30% by the end of October to have a decent shot at double crop corn. So a lot of the bullish story was, okay, they're 17% planted, they're behind schedule. Well, Brazil went out and planted almost 20% of their crop. That is insane. In 1 week, they planted 20% of their crop, and they are no longer delayed. They're actually almost 3 percentage points faster than their 5-year average on planting pace. So the whole story of Brazil soybean planting is late. That story is in the rearview mirror. And we actually have some pictures from down there. So let me scroll through here and let's just look through some of the images. This is from a customer in Brazil and a farmer. These are earlier planted soybeans. So this is beans that were planted some time ago. And you can see they're pretty well developmentally. And that's his setup there. It's got the bins, the shop, some solar panels. Looking real good. The beans, this obviously isn't what was planted last week, right? These are older beans, and he's proud to share the pictures. He also showed this was their terraces. They're doing a little bit different. They copied this from how they were doing some terraces and some groundwork for sugarcane in their region, and they're using it. The main reason to set it up this way is to get they have big machinery to be able to get that in and out. There they are spraying. So developmentally, the good beans in Brazil, this is about what they look like right now. And all is well. And in this particular region, plenty of rain as well. So that's the crops. Crops are looking good. Planting delays are over. Now, if you know a little bit of my philosophy of working, I would much rather watch buyers and sellers than fundamentals. Just looking at fundamentals, it's like, oh, good crops, no delay, price down. We're going to see a little bit of that, but there's a little bit more to understanding how prices are formed, and the decision about marketing is downstream from things that effectively help place you in a good place in the market. So I want to focus in on this image. We have this every week. See if we got it big. There we go. So this is the philosophy behind the marketing that we do. And this is, again, this will be repetitive. You'll see this every week. Don't worry about it. I really want to emphasize this. So the first thing is, the first step to effectively having grain prices is having a marketing portfolio. If you're watching this in real time or close to real time, you and I have worked together to set up your specific portfolio for your specific operation. And then we're going to place your bushels in the buckets that they need to be in order for you to have to know how to manage your portfolio. Then based on that portfolio, we've established seasonals, funds, and technicals. That's what we're going to look in today. And then action, the spoiler alert was, I don't see a need for action this week. So no action required this week, but let's look through the rest of the information and just kind of see where the markets are at and see how the markets are behaving and how we should respond. So the next image I wanted to show you, this one is the net position of funds. Let me figure out how to get our marker up here so we can show this. Edit. Well, there we go. That's what we want. All right, so let's get maybe a blue stylus here. So the first thing we want to show you, we had a record sold position. This is the position of funds, managed money. The only halfway decent shot we had besides the 1st of January was back here in May when the spec funds got close to net neutral. And so again, we've seen this uptick here. They got a small position, and then now there's the last 3 weeks they've sold off, and so they're pressuring it. What's the worst case scenario? What's like every farmer's nightmare? Well, every farmer's nightmare is that we're going to see this. We're just going to see the sell off back down here. Is that possible? Absolutely. Everything's possible in marketing. But the truth of the matter is, at this threshold, right about in here, this is the level where I'm willing, under this area here, this is oversold area. for spec funds, right? So we're right just a little bit, but we're in oversold territory in here. So for me, this is not an exciting position to be selling soybeans. I would much rather have at least a net neutral and ideally a bot position or a fairly large bot position from the spec fund. So what are the spec funds going to do and what have they done? You can kind of tell this story one of two ways. You can be the pessimist and say, we established a record sold position. So if we can get maybe a blue here, see if that shows up. Right about in here is where we established a record sold position on spec funds, and the price still went down a little bit, but they were already kind of, on this last move down, they were already kind of getting out of it. And so if you want to be a pessimist, you could say, they sold here, and then they're gonna, now we're at this price level and they're going to sell again. So this thing is gonna absolutely get destroyed. Is that possible? Yes. That's the worst case scenario. That's bad news. So that's why we don't only look at the spec funds. If the spec funds establish a neutral or a bot position, then I would expect we would see this soybean market coming up. First level of resistance is the 20-day mover. Next level of resistance would be here, these previous highs, and then we're going to get this 200-day moving average coming down. I'm not saying this thing's amazing, right? But it wouldn't surprise me too much if in the next few weeks we don't see soybeans somewhere between 10 and 11. Kind of hovering. I know that's a big range, but it's also, if it's going to be between 10 and 11, do you get excited about selling 990 beans? No, you don't, right? So that's kind of what I expect here on the soybean market. It's also important, we just have this here. It's important to point out a couple of things. One is we've tested, if you watched last week's video, it talked about a double bottom, and we tested this kind of 2 times. And then again today, I'm actually going to open the trading view because I want you guys to see soybeans. It's looking an awful lot. If I zoom in on this, this is the January contract. Remember, a key reversal is when in the same trading session, you take out the high and the low, and then you close in the opposite direction. Today's looking an awful lot like we're going to get here in a few minutes. We're going to get what very likely is a key reversal trade in the bean market. Here's the June contract, if we can get it pulled up. There, it's looking, let me zoom this up a little bit there. It's looking an awful lot. This is actually the July soybean contract. So January contract, and then here's the July contract. It's looking an awful lot like we're going to get a key reversal. I'm not saying this thing goes to moon, but like I said, as of now, do we have confirmation it's a double bottom? No, but we've tested it, and we aren't falling lower. Now let's look at, I also wanted to show you, well, we'll talk about, let's see if I can scroll ahead. I think I have an image of basis. Yeah, so Purdue has a real good basis tool that I like a lot. And on that basis tool, you see that the cash markets for soybeans, this is basis. This is the Ohio River basis. So the export market, we can't say that there's a lack of demand. Export for beans is actually stronger if you just look at the basis, not numbers, but just like, remember, I like to watch buyers and sellers, actual people that are putting their money where the mouth is. And buyers of soybeans are willing to pay a stronger basis on the export market. It's a similar story if you look at soybean processing, which you can do on the website pretty easily, but it's not like there's no demand for beans. It's not that nobody wants beans. It's just planting advanced 20 percentage points in Brazil, and that has added a little bit of weight to the soybean market. So now we're going to shift gears, and we're going to go back to corn. Go back a couple of images here to corn. We'll start with the spec, the spec fund position on the corn. Actually, I'm gonna make this a little bigger so it'll be a little easier to visualize. There we go. All right, there we go. On the corn, So if we're looking at corn, and let's get it where we can edit it here. There we go. So if we're looking at the corn position, let's get some blue. Similar story, right? Back in May, we got almost in neutral, and then it sold way off. And then here in mid-July, it bottomed out, and then it's been gradually kind of stair-stepping its way back up. Did okay, and then we had a bad sell-off last week, and then it's already coming up a little bit. So the speculators, if you kind of look at their corn position, I'm not saying they're bullish. They're still sold, right? They're make no mistake, I'm not saying that this is a bullish scenario. They're still, most speculators are betting that corn will go down. I'm just saying that if we look at, let me back out of some of this, below this price level, right about in here, right? Here, this is where you buy to counteract, all of these levels under this is where we want to be buying corn because the prices are artificially low. And we're kind of hovering around there, but if this thing goes to neutral or positive, the price is going up. So that's just an important reminder as we look at the spec position of the funds. And then let's take advantage and go ahead and look at the corn price. First of all, the first thing that it's important to point out is that the corn market in Chicago is stronger than the bean market. What I mean by that is we had these lows, and then soybeans, they made a run up here, and then the soybeans came all the way back down, similar to these lows here, right? And then now we're like, maybe they're going to go up. I don't know. Corn, let me clear that up a little bit. Corn, when it came back down, it couldn't even drop to this level. Stayed here, and it's already turning a corner. Tried to fail here, couldn't really. This looks to me like corn's trying to break out to the upper side. Again, I'm not overly bullish. This is not a bullish sentiment. This isn't a we're going to the moon sentiment, but our first resistance is the 20-day. Last time we failed there, but just barely. It seems like we're testing that. Our next resistance would be here, these previous highs from October. And then we do have this 200-day coming down. So I'm not saying we go to the moon, but 440 to 450, I'm looking here at the March contract. That doesn't seem out of the question, right? That doesn't seem like something impossible to get back up to. And if we break through that, then we can get a little more optimistic. $5 might be out of reach, but if we start stair-stepping up here, that's going in the right direction. So that's the technicals on corn. Now, what's making corn move up so high? What's the story on corn? Why are we so friendly corn all of a sudden? Cancel that. A big part of it is this. Brazil, it produces a lot less corn, but they are one of our competitors on the export market. And corn prices in Brazil are actually the highest since they have been. This is in Brazilian currency, but they're the highest they've been. This is a continuation chart. So these gaps in the chart are transitions from one contract to another. And the price level is the highest that it's been since first half of 2023. This is significant rally. Now, why is corn in Brazil? And I'll go back here. Just before I do that, I'll show you basis. Basis, this is corn as well. This one is the Ohio River. So exports on corn are strong. So we're seeing friendly export numbers, and we're seeing so strong basis. Corn in Brazil going through the moon. Why is that? Why are we so optimistic corn all of a sudden? And the truth of the matter is, Brazil produces a lot less corn, but they have taken quite a bit of business from the U.S. on the export side. So even though they don't produce as much, they export it. The issue is ending stocks for corn in Brazil are very tight. And then we had these last few days, or week or 10 days, we had their fat cattle in Brazil just absolutely go through the roof. And so there was already tight inventories. Now there's this demand to say, oh my goodness, we've got to put weight on cattle to take it to market. So there's this new demand for corn. So if you want corn in Brazil, you have to pay enough. You have to pay enough for that corn to not hit the export market. That's the name of the game if you're a buyer of corn. How much do I have to pay for my corn to not get shipped outside of the country because I need it here in Brazil, if you're in Brazil. And that happens, I mean, the flip side of that is if you sell corn in the US, they're like, okay, well, they're trying to not export corn out of Brazil because there's domestic demand. So what's going to happen to U.S. corn exports? They're going to improve. And that's what we've seen, this relative strength in corn. Last week, the relative strength in corn was due mainly to the delays in planting. This week, there's a demand-driven story for Brazilian corn, which will very likely become a quick demand-driven story for corn in the U.S. I'll go back to sharing the screen, and we want to wrap up with just kind of our thought process here on the recommendation. So what should we do? We're in this scenario. What should we be looking at doing? Well, seasonally, October is still a buy. It's the 30th, but it's still a buy for corn. If we're looking at Chicago, seasonally, October is still a buy for beans. Managed money, they reduce their position just below the threshold where it doesn't justify buying corn from a managed money standpoint. And from a bean standpoint, they actually sold it. So it actually does justify buying. And then from a trend, yeah, we're in downtrends on both, but I don't like selling in downtrends, right? I would much rather sell in an uptrend. So none of these indicators tell me that, yeah, I should absolutely be locking in Chicago. It's time to be making sales. I'm not excited about it. Can you very easily come up with a bearish story as to why prices should go down? Absolutely. But I use indicators and seasonality and funds and a philosophy of working that does not say, hey, let's panic sell at lows. That's not the way I like to handle markets. So from a Chicago standpoint, we have that. From a basis, let's see if we can actually, corn and soybean basis is strong and strengthening. Also, historically, we would tend to see stronger and stronger basis. So for me, I don't see a need, oh, you got to lock in these bases or you got to lock in this board of trade price. I don't see a need to be taking action short term in this market environment. So the thought process technically is soybeans are testing double bottom and seem to be trading in a key reversal today. Corn market in Chicago is struggling to stay below the 20-day moving average and will likely test resistance levels higher. For all of those reasons, that's why we came to the conclusion right at the beginning of the video, no action required. I don't see a reason for you to be worried about not having made sales at this point in time. Again, this is under the assumption that we've worked together, we've put together a portfolio, and we are within that portfolio, we've accounted for your cash needs, your costs, and all of that. So if you're just tracking your sales based on that portfolio, this isn't a week that we would be adjusting that portfolio. Before, that's the end of the presentation, so to speak, but we do have a few questions that we're going to be going over. I'll pull that up and go over the questions. First question. Okay, should I sell corn or beans? Should I sell corn or beans? Usually when someone asks that question, they're like, are you more bullish corn or are you more bullish beans? But I don't really like my market opinions to be the driving force behind strategy. So the answer to that for me is a little bit nuanced. I'll put two ends of the spectrum. If you're short on cash, you can sell less bushels and make more cash with beans. That would be a reason to sell beans. A systematic problem with U.S. farms is that they don't typically store enough soybeans into the spring, and so that's why we typically have relatively stronger basis and relatively stronger returns to investment on soybeans than we do for corn. So should I sell corn or beans? You really need to kind of go back into your portfolio and figure out what's motivating the sales. But again, on either market, my recommendation is don't sell either. So I'm not saying it's a bad question. It's just that's not it's not my goal to be more bullish one or less bearish another. My goal is to help you build a portfolio of your bushels, have a key plan for each one of those crops, and then we're going to execute based on that foundation, that bottom level of the pyramid. Then we're going to execute on that portfolio in accordance to systems. And right now, it's not really showing that we should be taking any action from an execution standpoint. Next question. If Brazil soybean planting is caught up, why is corn market in Brazil strong? So that's a really good question. So if there's a little nuance to that, but so the assumption is, okay, the bullishness that Aaron mentioned last week was there's delays to planting, and then all of a sudden the planting is caught up and corn in Brazil is even higher. So what's going on? Well, the truth of the matter is we had the concerns last week were supply side driven. There may be a delay to planting corn, so there may be less corn or even corn available later. This story from this week, it just happened to be back-to-back weeks, is actually in Brazil. It's actually demand driven in Brazil. So there's more demand for corn this week than last week, or evidence of demand. People are really making sure they get their hands on corn, whereas last week there was concern about a reduction in supply. Either way, no matter how you slice it, doesn't matter whether they produce less or export less. That creates export volume here in the U.S., and that's why we're seeing the stability of the corn market. Again, it's not that I'm bullish corn, but seasonally it's October where we have a weak market, and speculators tried to sell it off 2 weeks ago, realized they couldn't, are kind of, tucking their tail between their legs and saying, maybe I don't want to be selling corn. So I want to classify it as I'm bullish corn, but kind of how low can it go, right? It doesn't seem like it looks more like a stair step up the other side of harvest than it does, you missed the early October chance, you missed it all. That's not how I feel about this market. Finally, we got one more question. Oh, this is a good one. Politics. It's always tricky to talk about politics, but we'll give it a go. Will a Trump win be good for crop markets? So coming up on elections, if Trump wins, is that good for crop markets? I think the first thing, we go back to remember 2018, trade embargo, bad for beans, bad for prices. That was rough. And then we came out of that in 2012 with a vengeance, right? So that demand was still kind of there. It just took a 18-month or 2-year, I guess, pause, and then we got a big bull run. Two factors. The first thing is, again, I don't know, right? It's no political commentary. I don't know what the impact will be on markets, but two things to consider. Number one, back in 2018, I think the world realized that soybeans out of Brazil are enough to meet the Chinese demand. And probably we're seeing Chinese demand waning, or that's probably, we've already probably turned the corner there where we're going to see stability and then reduction in Chinese demand for beans. And we have seen increases to Brazil's supply of beans. So I think if we have trade wars similar to 2018, I would be surprised if, number one, soybeans are the central point of that again. And if they are, I don't know that it would have the same effect, because I think everyone in the market kind of knows that Brazil has enough soybeans to meet the Chinese demand. Second point, though, that I think does have a big chance of impacting, it's kind of twofold, right? It's economics. So inflation tends to be good for commodities. So if we have policies that tend to have an inflationary impulse, whether that's Trump or not, but there's several policies that might have inflation pressure. Inflation pressure tends to be good for commodities. The flip side of that, though, is last time Trump was in office, he also really defended a strong dollar, and a strong dollar could hurt us a little bit on the export side of the market. So I think that the overriding narrative is probably that we are in a world with enough supply and demand, and I think that'll be the trump card. And we're very likely just going to settle into those not boring markets, but more sideways, contained markets of trade up, trade down, make grain trade hands. That's normal. I mean, we had it from later in 2014 through like 2020, really, kind of, just that sideways up and down market. I think that that's going to be the predominant driving force, regardless of who wins. But there could definitely be some interesting stories, both from an economic or inflation standpoint, as well from a dollar standpoint. We'll know soon enough, right? We'll know soon enough and get the elections behind us. Right now, the driving force, again, is bean planting got caught up. Demand, there's evidence of good demand for beans. There's also evidence of good demand for corn. And technically, and from a fund standpoint, I think we just wait on sales. So it's good to project out what are some possibilities so that when those headlines come our way, we know what to see. But my bias is always towards what do we know now and how can we take action on it. So that's how I'm going to direct. Recommendations are always based on that philosophy, which year in and year out has good track record and good results. And that's my focus. So again, thank you for your time this week. And we'll shut down for today.